Do you know what's scarier than being broke? Being comfortable with it. You tell yourself, I'll start investing when I have more money. But let me guess, that was 3 paychecks ago, right? Meanwhile, some guy who flips burgers at In-N-Out decided to throw $50 into the market every month, and he's probably sitting on more money than you, not because he's lucky, but because he didn't wait for permission to get rich. Here's the truth. The biggest scam isn't Wall Street, it's you, convincing yourself you're bad with money, while scrolling TikToks made by people flexing their credit card debt like it's a badge of honor. You've been trained to believe the stock market is a casino, that investing is only for the elite, for the rich, the insiders, the people who use words like diversified portfolio over oysters. Meanwhile, you're just trying to keep the lights on, but that's the lie Jim Cramer, the man who literally screamed at the Fed on live TV, is here to destroy. Because here's what Cramer's book, How to Make Money in Any Market, really says. You've been hypnotized into financial paralysis, and it's time to wake up. Now, before we break down how to actually make money in any market, let's get one thing straight. This video falls under the Fair Use Act on YouTube. It's for educational and transformative purposes only. We're not just summarizing Jim Cramer's book. We're ripping it open, shaking out its guts, and showing you why your excuses don't stand a chance. So who's Jim Cramer? You've probably seen him yelling about stocks on CNBC. The guy with the red face, big energy, and even bigger opinions. But long before the TV lights and the hedge fund billions, Jim Cramer was sleeping in his car. Literally. The man was broke, evicted, surviving off fried chicken and rage, and yet he found a way to invest $10 here, 20 there, until his portfolio was worth more than his entire family tree had ever dreamed of. This book isn't written by some finance professor in a cashmere sweater. It's written by a man who bled for every dollar he made. And that's what makes How to Make Money in Any Market so dangerous. It doesn't just talk about investing, it talks about defiance. Cramer's core message: stop outsourcing your financial future to professionals who don't give a damn about your money. Wall Street doesn't want you to be smart. It wants you to stay scared, because scared people keep paying fees, scared people stay broke, and scared people don't ask questions. But Cramer's whole mission is to make you the kind of investor Wall Street hates, the kind who actually understands what they own, the kind who sees a market crash and says, perfect, everything's on sale. Now, if that makes you uncomfortable, good, because this isn't financial advice, it's financial confrontation. By the end of this breakdown, you're going to see why Cramer calls this book the most radical investing guide ever written. You'll learn why every so-called crash is actually a discount, why the rich don't fear the market, they feed off it, and why you, yes you, can build wealth even if your starting balance looks like a bad joke. This isn't about getting rich quick. It's about stopping the slow death of financial ignorance. So grab a notebook, because in the next chapters, we're burning your fear of the stock market to the ground. Welcome to Mindful Reads Hub. Let's get started. The awakening, seeing the market for what it really is. They told you to stay away from the market because it's too risky. You believed them, and now you sit there, scrolling through your phone, wondering why your savings account is shrinking faster than your motivation. Let's be honest, you don't hate the stock market. You just hate how it exposes your fear of losing. Because deep down, you know you've been playing defense your entire financial life. Jim Cramer didn't start as a Wall Street wizard. He started as a guy sleeping in his car, saving $10 a week while the world laughed at him. He didn't have privilege, connections, or trust funds. He had hunger and a box of instant noodles. And that hunger became the foundation of his wealth. That's what this part of his story is really about. Not the money, but the moment you stop waiting for permission to make it. Cramer says the market isn't your enemy, fear is, and fear has been marketed to you your entire life. Because fear keeps you obedient. It keeps you buying $8 lattes while complaining about the system on social media. You think investing is a gamble? No, not investing is the gamble. because the only guaranteed way to lose in the market is not showing up. History proves it. Every decade, every crash, every so-called apocalypse, the market climbs higher, not because it's fair, but because progress doesn't care about your fear. You can curse capitalism all you want, but while you're cursing, capitalism is compounding. Cramer learned this the hard way. He watched his father lose everything on a bad stock tip. He watched regular people trust experts who didn't care about them, while a paper salesman became a millionaire just by buying and holding one good company. Not because he was a genius, but because he was consistent. And that's the rule no one tells you. You don't need brilliance to win in the market. You just need consistency. You don't need to time the storm. You just need the courage to stay in the rain. The irony? We live in the most financially connected era in history, and yet most people are financially illiterate by choice. You have more access to data, analysis, and education than every billionaire of the 1980s combined. And still, you let fear, pride, and TikTok advice decide your future. You don't need Wall Street anymore. The internet is Wall Street. You don't need permission from a broker in a $2,000 suit. You need permission from yourself to start. Cramer calls it trusting the market, but what he's really saying is trust yourself. The market isn't a mystery, it's just a mirror. When you panic sell, it reflects your lack of belief. When you buy garbage stocks because some influencer yelled to the moon, it reflects your impatience. The market doesn't steal your money, your decisions do. Think about it. Every time the market dips, the news calls it a bloodbath. They show red arrows, panicked faces, talking heads forecasting the end of the economy. And yet, every single time, the market recovers. Every single time. It's like watching people freak out because the tide went out, not realizing the ocean always comes back. Cramer's point is brutal but true. Every crash you fear is someone else's discount. The rich don't run from red days. They salivate over them. They don't panic. They prepare. They buy when you sell. They hold when you doubt. And they retire when you're still thinking about starting. That's the awakening. To realize the market isn't a lottery. It's a test of psychology. It's the one game where the impatient transfer wealth to the patient. You're not losing to Wall Street. You're losing to your own lack of discipline. You don't need a six-figure income to invest. You need a spine. $50 a month, automated and consistent, beats the guy who waits for the right moment, because the right moment never announces itself. It only reveals itself to the ones already in the game. So stop treating the market like a casino and start treating it like your apprenticeship in wealth. The truth Cramer discovered, and the one most people never do, is that the market isn't about math, it's about belief. And every time you choose fear, you make someone else rich. The market doesn't care about your excuses, it only rewards commitment. And the second you understand that, you stop being a spectator and start being a player. Key takeaway: you don't have to be a genius to build wealth. You just have to stay in the game when everyone else is running for the exit. The market doesn't reward emotion, it rewards endurance. Favorite quote: every decline has been worth buying. But until now, nobody has shown you how and why to do so. Chaos theory, turning volatility into power. You ever notice how everyone says they want financial freedom, but the moment the market drops 2%, they act like the apocalypse just started? That's not investing, that's emotional cardio. You're sweating, panting, burning energy, and going absolutely nowhere. Here's what nobody tells you. The market was never designed to be comfortable. It's designed to test how much chaos you can stomach before you sell your future for temporary peace of mind. Jim Cramer calls it what it is, volatility, and says the amateurs treat it like danger while the pros treat it like oxygen. Most people stare at a red chart and think, loss. The people who get rich see a clearance sale because volatility isn't punishment, it's the fee you pay for the possibility of greatness. Wall Street, of course, prefers that you stay terrified. They whisper soothing lies. Just buy the index and forget about it. Don't worry your little head about individual companies' translation. Stay asleep so we can keep skimming your potential. Index funds are the participation trophies of investing. You can't really lose, but you'll never truly win. You'll get average returns while paying someone else to convince you that average is safe. And that's the quiet tragedy of modern money culture. People would rather be safely mediocre than risk being extraordinary. Cramer isn't anti-index, he's anti-complacency. He says, fine, own your S&P 500 fund, it's your seatbelt, but you still need to drive the car. Find a few hero stocks that make you feel something. The companies whose products you actually use, understand, and believe in. Because owning a piece of something real does something psychological. It flips you from consumer to capitalist. You stop complaining about prices and start caring about profits. Think of it like this. Most people are passengers on a roller coaster they don't control, screaming at every dip. The smart ones bought the park. Every crash, every correction, every headline screaming, "Markets in turmoil" is just another test. Will you hand over your shares to someone braver than you? Or will you finally realize that fear is a market strategy? Usually somebody else's. Cramer learned that early. He watched the Dow triple, collapse, and triple again. He's seen every flavor of panic, the dot-com implosion, the Great Recession, the COVID freefall. Each time the script is identical. First comes euphoria, then denial, then terror, and finally the quiet upward crawl that makes millionaires out of the few who didn't bail. The chaos isn't random, it's cyclical, almost predictable in its unpredictability. That's why mastering volatility isn't about predicting prices, it's about mastering your pulse. You don't beat the market with IQ points, you beat it with EQ. The discipline to buy when your stomach says run, to hold when the mob screams sell, to remember that the graph zoomed out always goes up. Here's the ugly truth. You're not competing with institutions. You're competing with your own impatience. The pros know this. They wait for you to flinch. They know the average investor will bail after a 10% drop. They know you'll chase hype on the way up and regret on the way down. They don't need insider info. They just need you to keep being predictable. Volatility is their weapon. It can be yours too, if you stop fearing it. Look at any long-term chart. Underneath every crash is a staircase. Every drop, a future climb, but only for those still standing on the steps. So next time your portfolio dips, don't ask, how much did I lose? Ask, whose fear am I profiting from? Because someone always profits from panic. It just doesn't have to be someone else. The market rewards consistency, not courage in bursts. A little money every month into things you understand. That's how compounding turns into domination. Chaos is the forge that shapes conviction. You can't skip it and still expect strength. If you want calm, buy a savings bond. If you want freedom, learn to breathe in volatility. Key takeaway. Volatility isn't your enemy. It's the training ground. Use chaos as information, not intimidation. The moment you stop reacting to every swing, you stop being prey and start becoming the predator. Favorite quote, the pros say stay the course, but they never tell you the real secret, that the course is chaos, and you can learn to run it faster than they can. The hunter's instinct, finding opportunities others miss. Every time there's noise in the market, most people freeze. They scroll through headlines like it's a horror movie, whispering, should I sell? Should I hold? Maybe it's safer to wait, but waiting is the trap. Waiting is where dreams go to rot. Because the truth is, opportunity never announces itself in a calm tone. It screams through chaos while everyone else is covering their ears. That's what separates spectators from hunters. Hunters don't need the crowd's reassurance. They need blood on the floor, red tickers, panic in the air. That's when instincts kick in. And if you don't have instincts yet, Cramer is trying to build them for you. He's telling you to stop staring at the market like it's a random machine throwing out numbers and start seeing it for what it really is, a living ecosystem that rewards observation, not obedience. He doesn't want you to be the gambler who prays for luck. He wants you to be the biologist who studies patterns until chaos becomes predictable. Cramer's entire argument here is that markets speak their own language, and the people who learn to translate it stop being victims of volatility. When everyone else is asking what just happened, they already know what's about to happen. Because patterns repeat. Industries rise and fall on the same emotional loops: greed, excitement, denial, fear, despair. Repeat. The hunter watches that loop like a clock and waits for his moment to strike. Most people think reading the market means scrolling through CNBC headlines. Wrong. That's like trying to understand the ocean by watching raindrops hit the surface. The headlines tell you what already happened. The real clues are buried underneath: the earnings reports, the company statements, the tone of a CEO who suddenly stops sounding confident. Cramer's point is that the data is always there. People just don't bother to read it until someone on TV tells them how to feel about it. He learned this from decades in the trenches. Every great stock, Apple, Amazon, Netflix, Nvidia, was hiding in plain sight before it exploded. He saw it because he was paying attention to the world, not just the tickers. He noticed how everyone was buying iPhones, how packages from Amazon started flooding doorsteps, how streaming was replacing cable. None of this was secret information. It was observation turned into conviction. That's the hunter's instinct, to notice what everyone else ignores because they're too distracted by the noise. You don't need insider info. You need insight. The Starbucks line that keeps getting longer, the car brand everyone suddenly drives, the software your office can't live without. These are the whispers of the next big opportunity. But you have to train yourself to listen when everyone else is talking. And here's where Cramer's challenge cuts deep. He says most people lose because they're lazy. Not stupid, lazy. They want wealth without homework. They want profits without patience. They'd rather buy the rumor and sell the regret. Hunters do the opposite. They stalk trends quietly, collect data obsessively, and pull the trigger only when the evidence is undeniable. The irony is that this isn't just about money, it's about mindset. The same instincts that make you a smart investor will make you smarter at life. You start noticing patterns in people, businesses, even politics. You stop reacting to headlines and start predicting behavior. The world stops surprising you because you finally learned how to watch it. Cramer says the market doesn't hide opportunity. It hides it in plain sight behind people's fear and laziness. He's right. The difference between a millionaire and a spectator isn't timing, it's attention. The hunter sees opportunity where the herd sees danger, and when the herd runs, the hunter collects what they dropped. Most people want investing to feel safe, but safety and opportunity rarely live in the same zip code. Every great company started as a risk someone was crazy enough to believe in. If you want guaranteed comfort, stay in the index fund. If you want transformation, start doing what everyone else is too afraid to do. Think for yourself. The market rewards pattern recognition, not panic reactions. The question isn't, is it risky? The question is, do I understand the risk better than they do? Because when you do, their fear becomes your profit margin. That's how you hunt, by being patient when they're impatient, analytical when they're emotional, cold when they're melting down. Cramer's message isn't about chasing stocks. It's about developing the mental reflex to spot value in the middle of chaos and act before comfort returns. Because by the time the crowd feels safe, the opportunity's already gone. Key takeaway: the people who win in the market aren't the ones who react fastest. They're the ones who observe longest. The next big opportunity is always hiding in plain sight. It just takes the courage to look when everyone else is blind. Favorite quote: While others chase trends they don't understand, I look for the companies everyone uses but no one talks about. That's where the real money hides. The mind of money, psychology of the market. You sit there staring at your portfolio like it's a report card from a teacher you don't even respect. Red numbers, you panic. Green numbers, you feel invincible. It's ridiculous, but it's human. And that's the problem. You are the problem. Not the market, not the algorithms, not the billionaires. You. Because money doesn't just live in your bank account, it lives in your mind. Every financial decision you make is just an emotional impulse dressed up as logic. You think you're rational? Fine. Then explain why you've sold winning stocks too early, but held losers for way too long, whispering, "It'll come back," like it's a prayer. The market isn't punishing you, it's mirroring your psychology in real time. Jim Cramer gets this. He's seen every type of investor. The overconfident rookie who thinks a few green days make him Warren Buffett. The pessimist who sees a bear market in every dip. The gambler who confuses luck with skill. His conclusion? The stock market isn't a math test. It's a psychological experiment with your ego as the lab rat. People love to say, "I'll invest when things feel safer." But the market never feels safe. It feels like jumping into cold water every single time. Cramer argues that's exactly why most people never get wealthy. They mistake comfort for wisdom. Meanwhile, the real players learn to separate feelings from facts. They understand that fear and greed are like gravity. You can't eliminate them, but you can learn to counteract their pull. Let's be honest. Half of what people call strategy is just rationalized emotion. You bought that stock because you liked the CEO's interview. You sold the other one because your coworker said it was too risky. That's not investing, that's gossip. The market doesn't care about your opinions, it only responds to discipline. Cramer teaches that successful investing starts with knowing your own mental weaknesses. Maybe you're addicted to confirmation bias. You only read opinions that agree with yours. Maybe you're anchored to your entry price. You can't accept that you were wrong, so you keep holding. Maybe you chase trends because you're terrified of missing out. Whatever your poison, the cure starts with brutal self-awareness. He's not saying emotions are bad, they're just terrible investment advisors. The trick is to use them as indicators instead of instructions. Fear? It means opportunity's close. Greed? It means a correction's coming. Boredom? Probably time to review your thesis. The best investors aren't emotionless. They're emotionally fluent. They can feel panic without acting on it. Cramer shares stories of traders who blew up fortunes because they couldn't manage themselves. One guy refused to sell a collapsing stock because admitting defeat hurt his pride. Another kept doubling down on losers, convinced that the market was wrong. Spoiler alert, the market doesn't care about your feelings. It's not your therapist, it's your mirror. The truth? You'll never master the market until you master your mind. It's not about being fearless, it's about recognizing that fear is data. When everyone's terrified, prices fall below value. When everyone's euphoric, prices rise above it. Your emotions aren't unique. They're a lagging indicator of mass psychology. The edge is in acting before the crowd catches up. This is where the transformation happens. You stop asking, is the market up or down? And start asking, what's the crowd feeling and how can I use that? Because when you learn to play the psychology of the market, you stop being its victim, you become its architect. The hardest truth Cramer throws at you is this: most people don't lose money because they picked bad stocks. They lose because they picked bad habits. They can't stand uncertainty, so they trade too much. They crave validation, so they follow noise. They think discipline means rigidity, when it actually means flexibility with conviction. Every day the market tests you, not with numbers but with emotions. Are you greedy enough to chase? Scared enough to sell? Confident enough to hold? The answer determines your future wealth more than any chart ever will. So yeah, maybe the next time you see your portfolio down 5%, Don't panic, smile. You're just watching your psychology in 4K resolution. If you can learn to see through that noise, to stay logical when everyone else is losing their minds, you've already beaten 90% of investors. Money doesn't care about your feelings. The market rewards emotional intelligence more than financial literacy. Learn to outthink yourself and you'll start winning games other people don't even know they're playing. Key takeaway: the market is a reflection of your emotions. Master your impulses and you master your returns. Your real opponent isn't volatility, it's your own psychology. Favorite quote: until you recognize that the enemy lives inside your head, every trade you make will be against yourself. Building the machine, your portfolio as a living organism. You ever notice how people talk about diversifying their portfolios like it's some spiritual ritual? They throw around buzzwords, risk management, asset allocation, balance, as if saying them out loud magically makes them responsible investors. But let's be real. Most people don't have a portfolio. They have a digital junk drawer, a few random stocks, a mutual fund their job threw at them, and maybe some crypto they panic sold at the bottom. Then they wonder why their finances look like a roller coaster designed by a toddler. Jim Cramer would call that what it is: lazy investing. The kind of approach that guarantees mediocrity because it confuses ownership with understanding. He's brutally clear. You're not supposed to own everything, you're supposed to own intentionally. He compares the market to an organism and your portfolio. It's the ecosystem you're responsible for keeping alive. If you treat it like a collection of pets you forget to feed, don't cry when one of them dies. Cramer's idea is simple but dangerous because it forces accountability. Every stock you own should have a reason to exist. It should earn its seat. He breaks this down into what he calls the money machine, a portfolio structured not for perfection, but for survival. That means diversification done right, not diversification done lazy. It's not about owning one of everything. It's about owning enough different things that when one burns down, the rest don't go with it. Most people think diversification means buying a random mix of stuff: tech, energy, a sprinkle of healthcare. Boom, balanced. But that's like saying eating fries, pizza, and ice cream is a balanced diet because they're all from different food groups. Real diversification is understanding how sectors interact. When one thrives, another suffers. When inflation rises, certain industries gain power while others bleed out. You're not spreading your risk. You're managing a living organism, making sure every part supports the others. Cramer learned that from experience, not theory. He's seen portfolios implode because their owners were too proud to admit they'd built houses of cards. He's watched investors fall in love with a single stock, treating it like a soulmate instead of a tool. And he's been that guy too. Overexposed, overconfident, watching the market teach him humility in real time. That's why he preaches balance, not the dull passive kind, but the kind that lets you survive a storm and come out richer. Here's the uncomfortable truth. Your portfolio isn't supposed to make you feel safe. It's supposed to make you feel prepared. Cramer insists on building it like an engine. Different parts, different purposes. You need growth stocks for ambition, income stocks for stability, and a bit of cash for opportunity. You don't throw money at whatever's hot. You build something that keeps running even when the driver's scared. Think about it like this. The average person builds their portfolio like a playlist. They add what's trendy, skip what's boring, and then wonder why it doesn't play well together. The pros build it like a symphony. Every note, every section, every instrument adds depth. You need your violins, the safe, steady earners, your drums, the growth plays, and your brass, the risky, loud bets. Done right, it doesn't just make noise, it makes music. Cramer points out that the market punishes overconfidence just as brutally as it punishes ignorance. That's why the best investors are always tweaking, rebalancing, trimming what's fat, feeding what's strong. They treat investing like maintenance, not magic. because a machine, no matter how well built, rusts without attention. And this is where most people fail. They want their portfolio to run on autopilot while they ignore it for years. That's how engines seize up. That's how fortunes quietly evaporate. Wealth isn't a one-time build, it's a constant calibration. You don't set it and forget it, you set it and refine it. If that sounds exhausting, good, because financial freedom isn't meant to be comfortable, it's meant to be earned. The people who build sustainable wealth aren't the ones chasing the next Tesla. They're the ones who understand how Tesla fits into the bigger system. They know when to add fuel and when to let the engine cool. They don't panic when it sputters. They pop the hood and make adjustments. Cramer's philosophy here is ruthless because it's true. If your portfolio can't survive a downturn, you don't have a portfolio. You have a ticking time bomb. And no, you can't just wait for it to recover if it's built wrong. The market doesn't owe you a rebound. You owe yourself the preparation to handle one. So stop treating your money like a collection of lucky lottery tickets. Start treating it like a business. Each dollar you invest should work for you, not sit around like an intern waiting for instructions. Build a system that can breathe, adapt, evolve. Because when the next storm hits, and it will, you don't want to be one of the ones running for cover. You want to be the one whose machine keeps printing money while everyone else is panicking. Key takeaway: your portfolio isn't a museum of random stocks. It's a living organism. Diversify with purpose, manage with consistency, and maintain it like a machine that your future depends on, because it does. Favorite quote: diversification isn't about owning everything, it's about making sure one mistake doesn't destroy everything. The downturn playbook: how the smart money wins in recession. Every time the economy stumbles, people act like it's the first time it's ever happened. The news throws up red banners, social media fills with market crash explained videos, and suddenly everyone's a survivalist, stockpiling canned goods and cash like we're all about to start trading gold bars in alleyways. But if you've been paying attention, you know recessions aren't surprises, they're rituals. The market cleans house and the weak get exposed. Jim Cramer has lived through enough of these bloodbaths to know the pattern. The amateurs scream, the veterans sharpen their knives. When everyone else sees doom, the pros see a sail. The goal isn't to survive the storm, it's to learn how to walk through it without flinching. He doesn't sugarcoat it. Downturns hurt, but they're not death sentences. They're the toll you pay for playing the long game. Most investors panic because they mistake movement for danger. A stock falls 10% and suddenly the world's ending. But here's the thing. Movement is the market's language. The market's not plotting against you, it's testing you. Cramer argues that the only way to win is to understand the rhythm of fear. He calls it the downturn playbook, but what he's really talking about is the psychology of pain. You can't stop the punches, but you can learn to keep swinging. Here's where his thinking gets brutal. A real investor doesn't pray for calm markets. Calm markets are for tourists. Volatility is where you earn respect. He tells the story of the 2008 crash where people sold everything, promising never to invest again. The ones who stayed, who bought quality while everyone else was vomiting fear, tripled their money in the recovery. The difference wasn't intelligence, it was emotional endurance. You see, most people treat recessions like personal betrayals. How could the market do this to me? As if the market knows your name. Cramer says that mindset is why so many people stay broke. You can't take losses personally in a game that doesn't even know you exist. Every correction, every dip, every crash, it's just part of the natural cycle. The problem isn't that downturns happen. The problem is that people panic before they think. He also breaks down one of the most misunderstood tools in the investor's arsenal: shorting. It's the dark art of profiting when prices fall. Most people see it as evil, betting against companies, rooting for failure, but Cramer explains it differently. Shorting isn't hoping for collapse, it's understanding gravity. If a company's fundamentals are garbage, if it's propped up by hype and debt, shorting it isn't immoral, it's rational. It's saying, this thing is dying anyway, I'm just getting paid for noticing first. And that's what separates smart money from scared money. Smart money doesn't fear downturns. It plans for them. They keep cash on hand, not out of paranoia, but out of patience. Because when the market crashes, good companies go on sale. If you've done your homework, a recession is your Black Friday. If you haven't, it's your funeral. Cramer hammers one point relentlessly. Crashes reveal character. When prices fall, you discover what kind of investor you really are. The talkers sell, the thinkers hold, the predators buy. If you're losing sleep every time CNBC says bear market, you're not investing, you're gambling with anxiety. Real investors build portfolios that can take hits. They diversify. They trim fat before the storm, not during it. They accept that losing money temporarily is part of the process of gaining it permanently. Let's be real. Most people don't even have a plan for when things go bad. They only plan for profit, never for pain. But the best investors, the ones Cramer respects, always have an exit strategy before they enter. They know when to sell, when to buy more, and when to do nothing. Because doing nothing in chaos is one of the hardest, most profitable skills you'll ever learn. There's a story he loves to tell about a friend who sold everything during a market panic, then spent the next 5 years waiting for the perfect re-entry point. Guess what? It never came. The market climbed without him, and his fear cost him more than any crash ever could. That's the irony of recessions. They are not where wealth is destroyed, they're where it's transferred. The fearful sell to the fearless. Every downturn is a redistribution of conviction. The lesson here is uncomfortable but true. The market doesn't owe you comfort. It doesn't care about your emotions, your predictions, or your favorite stocks. It only rewards those who can see opportunity through the fog of fear. So, the next time the market tanks, don't panic, breathe, reassess. Ask yourself, is this company actually broken or just temporarily beaten down? Because if it's the latter, congratulations, you've just found your discount. Cramer's not promising invincibility, he's promising perspective. A bad market doesn't destroy you. Bad reactions do. Every investor talks about wanting to buy low and sell high, but when the moment to buy low arrives, they're too busy watching the news to notice. Stop looking for safety in an unsafe game. Start building discipline that outlasts chaos. Because here's the hard truth. The people who make the most money in a recession aren't the lucky ones. They're the ones who didn't flinch. They saw fire, walked through it, and came out richer because they weren't busy running for the exits with everyone else. Key takeaway. Recessions don't ruin investors, they expose them. The market rewards patience, preparation, and the courage under pressure. You don't survive the storm by hiding, you survive it by understanding the wind. Favorite quote. When everyone else is panicking, you don't have to be a genius. You just have to be the one who isn't afraid. Growth mode, riding the bull without getting gored. Every bull market is a party, and most people don't know how to leave before it burns down. They start humble, cautious, dipping a toe into the water. But give it a few months of green candles, and suddenly everyone's a genius. The market only goes up, they say. Until it doesn't. Until that can't lose trade crashes and takes their ego with it. Jim Cramer has seen this movie too many times. He calls it the curse of momentum, the dangerous illusion that what's rising must keep rising simply because it has. But momentum isn't magic, it's just energy, and energy always runs out. The amateurs confuse momentum with safety. The pros know it's a countdown. When the market's booming, logic gets replaced by dopamine. Every small win feels like validation. You start believing you have some sixth sense, that you can feel the rhythm of the market, but you're not sensing anything. You're just addicted to the feeling of being right. Cramer calls that the investor's drug. It clouds judgment, blinds you to risk, and makes you deaf to warning signs. You stop checking fundamentals. You stop questioning valuations. You start saying things like, "This time it's different," which is Wall Street code for "I'm about to lose everything." Momentum investing works, but only for people who understand when to get off the ride. It's about riding waves, not worshipping them. Cramer's approach is to use momentum as a signal, not a gospel. You watch the volume, the sentiment, the fundamentals. You ride the enthusiasm while it's rational, and the moment it turns into euphoria, you trim your position. He's ruthless about that. Because once greed enters the chat, math leaves the room. He tells stories of traders who became legends in bull markets until the music stopped. They made millions on momentum, but they couldn't stop playing. They believed their own hype, and when the reversal came, it was fast, merciless, and humiliating. The same crowd that once praised them now called them reckless. That's the thing about the market. It never congratulates you for selling early, but it always mocks you for holding too long. The smart investor treats every rally like borrowed time. Cramer says you should always be thinking, what happens when this goes the other way? Because it will go the other way. The market isn't a straight line, it's a heartbeat. The goal isn't to avoid corrections, it's to survive them with your dignity and your profits intact. But that's not what most people want to hear. They want confirmation, not caution. They follow hype accounts, chase stocks trending on Reddit, and convince themselves they're early to something everyone's already talking about. It's not investing, it's collective delusion. You don't make money following excitement, you make money predicting its exhaustion. Cramer hammers a simple rule: bulls make money, bears make money, pigs get slaughtered. Translation: it's okay to be optimistic, it's okay to be cautious, but if you get greedy, you're done. Greed blinds you to reality. You start ignoring bad earnings, brushing off red flags, and pretending that fundamentals don't matter because the price keeps going up. That's when the market humbles you. Here's what separates seasoned investors from gamblers. They sell into strength. When a stock runs hot, they take profit, even if it means leaving some money on the table. Because professionals understand something amateurs don't. You'll never go broke taking gains. The amateurs wait for perfection. They want to sell at the very top, buy at the very bottom, and brag about it later. But markets don't reward perfection. They reward discipline. Cramer admits he's made the same mistakes. He's chased momentum, ignored signals, believed stories that didn't add up. But each time, the lesson was the same. Success makes you stupid if you don't stay humble. The moment you think you're smarter than the market, it slaps you in the face, hard. He also emphasizes the importance of knowing why you're selling. Don't just sell because you're scared. Sell because your thesis changed, because the story broke, because the fundamentals stopped making sense, because the company stopped earning what justified its price. Selling for fear is weakness. Selling for reason is mastery. Momentum investing isn't evil. It's powerful when used properly. The trick is to treat it like fire. Cook with it. Don't burn down your house. The moment a trend stops being logical, stop feeding it. Cramer warns against the cult of diamond hands, the idea that holding through pain makes you a hero. No, holding trash makes you a victim. You're not proving loyalty, you're proving denial. The real discipline is knowing when to cash out, not because the world's ending, but because your job is done. A good investor takes profits before the crowd remembers that gravity exists. The market rewards those who can let go while everyone else is still clinging. So, when the next bull run comes, and it always comes, don't get hypnotized by green screens and talking heads telling you to ride the wave. Ride it, yes, but remember, the best surfers aren't the ones who stay up the longest. They're the ones who know exactly when to jump off. Key takeaway: rising markets make people arrogant. The secret to surviving them is humility. Ride momentum, but never worship it. Know when to walk away with profit before the market takes it back. Favorite quote? The hardest decision in investing isn't what to buy, it's when to sell. Everyone wants to be right. Few remember it's better to be rich. The hidden battlefield inside the institutions. If you think you're playing against the market, you're already losing. You're not fighting numbers on a screen. You're fighting billion-dollar minds that know your every move before you make it. You're stepping onto a battlefield blindfolded while they built the field, wrote the rules, and probably own the scoreboard. The worst part? They've convinced you it's fair. Jim Cramer doesn't sugarcoat that reality. He's been on both sides of the line, inside the machine and outside it. He knows exactly how institutional investors think because he was one. And if you still believe the market is just a clean reflection of supply and demand, you're about to find out how naive that is. The institutions, the fund managers, the hedge funds, the algorithmic traders, they don't trade based on feelings or rumors. They trade based on power. They have analysts who live and breathe inside the numbers, supercomputers that read news before you've even refreshed your feed, and enough capital to move entire sectors just by sneezing. You're not competing with other small investors. You're part of the environment they feed on. Cramer exposes their playbook not to scare you, but to make you sharper. Because once you understand how they operate, you can start using their own behavior as a map. He explains how institutional players use volume, momentum, and media manipulation to create narratives that move markets. A single upgrade from a respected analyst, a leak about a merger, a CEO's carefully worded quote. It's all part of the performance. You think you're reacting to news. In reality, the news is reacting to you. And that's the uncomfortable truth. Retail investors aren't victims because the system's rigged. They're victims because they refuse to see the rigging. You still believe the talking heads on TV are there to educate you? No, they're there to influence you. The financial media doesn't serve information, it serves attention. Headlines are crafted to manipulate emotion, not deliver insight. When they say panic, it's already too late. When they say opportunity, it's already gone. Cramer's point is simple but devastating. By the time you hear the story, the institutions have already traded the ending. They planted the rumor, watched the reaction, took their profit, and left you holding the bag. It's not that they're evil, it's that they're efficient. They understand that perception moves price faster than fundamentals, so they make perception their weapon. But here's the twist. Cramer doesn't tell you to quit or play victim. He tells you to get smarter. He says the moment you start recognizing patterns in institutional behavior, you stop reacting and start predicting. When a big fund quietly accumulates a position, you see the volume uptick before the story hits. When they start selling, you spot the weakness before the downgrade drops. You stop following headlines and start following footprints. He gives you tools, not pity. Watch the flow of big money, where it enters, where it exits. Follow the earnings revisions, not the hype. Pay attention to options volume, to insider trades, to how the media tone shifts before and after major moves. Because none of it is random, it's choreography. And the media? Cramer learned firsthand that it's both powerful and dangerous. He's brutally honest about how financial journalism can distort the market, sometimes by design, sometimes out of ignorance. The stories that get the most clicks are the ones that trigger the most fear. You'll never see a headline saying, "Market behaves rationally, fear sells, outrage sells, certainty sells," and every emotional reaction you have while watching those headlines, someone's monetizing it. He reminds you that institutions thrive on your impatience. Every time you panic sell, they're buying your shares at a discount. Every time you chase a rally, they're unloading their bags. You're not being beaten by skill, you're being beaten by discipline. They plan months ahead while you're reacting minute to minute. That's the part most people can't handle. Discipline isn't exciting. It doesn't trend on Twitter, but it's the one trait that keeps the pros rich while everyone else keeps guessing. They don't need to be right all the time. They just need to let you be wrong at the right moments. So what's the solution? Cramer says it's to stop playing their game and start observing it. You don't have to outsmart a hedge fund. You just have to stop feeding it your emotions. When you learn to detach from the hysteria, to see the market as strategy instead of drama, you finally start winning small battles in a war that never ends. Here's the wake-up call. Institutions aren't unbeatable. They're predictable. They repeat behaviors because their incentives never change. They chase performance, they fear underperformance, and they live in quarterly cycles. Once you understand that rhythm, their power stops being mysterious. It becomes data. The media will always shout louder than the truth. The funds will always move faster than you can click trade. But the edge, the real quiet edge, is in understanding how they think. Because the moment you stop being the audience and start being the analyst, you stop being the prey. Key takeaway: you're not trading against chaos, you're trading against strategy. The system isn't fair, but it's readable. The investor who studies behavior instead of headlines will always outlast the one who reacts to noise. Favorite quote: "The game is rigged, but not against you. It's rigged against the lazy, the emotional, and the uninformed. Don't be any of them." Fireproof wealth: risk, discipline, and the art of defense. You ever notice how people only care about defense after they've already been punched in the mouth? Same in life, same in money. Everyone's a genius in a bull market, posting charts, bragging about their strategy, pretending it's skill when it's just luck dressed in a suit. But when the market crashes, that's when the masks melt. That's when the real investors, the ones who actually know how to protect their wealth, step forward. Everyone else, they panic, sell low, and start screaming that the game is rigged. Cramer calls this the point where the amateurs die and the professionals are born, because anyone can make money. Keeping it? That's a different universe. The truth is, most people don't have an investing strategy. They have a dopamine addiction. They check their portfolio like it's Instagram. They buy because everyone else is buying. And they hold too long because ego whispers, "You're different. You'll time the top," but the market doesn't care about your self-esteem. It punishes arrogance and rewards discipline. Cramer talks about protecting gains like a general talks about defending territory. You don't go to war without a plan, and you don't enter a trade without an exit. He's ruthless about this. Set limits, respect your stops, and never fall in love with a stock. The second you start getting emotionally attached, you've already lost control. Stocks aren't your friends, they're soldiers. And when a soldier's wounded, you don't hold their hand and hope they get better. You pull them off the battlefield. He reminds us that defense isn't passive, it's active. It's not hiding in cash, it's knowing when to rotate sectors, when to rebalance, when to hedge. It's building a portfolio that can take a hit without bleeding out. You don't protect your wealth by avoiding risk, you protect it by managing it. That means diversifying across assets, not just owning 5 versions of the same company with different logos. It means knowing your own limits, because if you can't sleep at night watching the market dip, you're over-leveraged, not invested. And then comes the hardest lesson: cutting losses. Cramer says this is the part where your ego fights you the hardest. You'll justify every bad decision. You'll call it a temporary pullback, a buying opportunity, anything but what it really is, a mistake. You don't need to be right to win, you need to be decisive. Pros survive because they know when to say, "I was wrong," while amateurs go broke insisting they're right. It's brutal, but it's honest. The market doesn't reward pride, it rewards adaptability. There's something deeply human in that lesson. We treat our losses like emotional wounds instead of tuition fees. We hate the feeling of being wrong so much that we'd rather lose more money than admit the truth. But Cramer's entire philosophy here is about humility as a weapon. The sooner you accept that losses are part of the game, the faster you learn to minimize them. Because survival isn't about avoiding pain, it's about controlling it. In today's market, everyone wants to talk about getting rich. No one wants to talk about staying solvent. The influencers, the finfluencers, the crypto prophets, they never show you their drawdowns. They never talk about the quiet months, the bad trades, the positions that didn't recover. They only show you the wins. But real investors, the kind Cramer's trying to create, understand that the best move you'll ever make is not losing your shirt when everyone else does. And let's be real, most people don't need a new investing strategy. They need emotional therapy, because protecting wealth isn't about numbers, it's about discipline. It's saying no when greed whispers yes. It's walking away from hype, resisting the urge to double down on a loser, and being bored enough to be rich. People think money comes from action. It doesn't. It comes from restraint. Cramer's message here hits harder because it's not glamorous. It's not about the next big trade or some secret stock pick. It's about developing the mental toughness to stay standing when the storm hits. When everyone else is panicking, you're the one checking your watch, waiting for the next setup. That's real power. That's what separates the gambler from the general. He doesn't tell you to be fearless. He tells you to be prepared. There's a difference. Fearless people die first in battle. Prepared people live to fight another day. And in the stock market, surviving long enough is how you win. Key takeaway. Wealth isn't built by constant wins. It's built by avoiding catastrophic losses. The smartest investors don't chase profit, they protect possibility. If you can't control your emotions, you'll never control your returns. Favorite quote, discipline is the only hedge that never expires. Legacy thinking, building wealth that outlives you. Most people think leaving a legacy means having your name engraved on some plaque or throwing your kids a trust fund so they can blow it all in a decade. But that's not legacy, that's ego. Real legacy is building something that doesn't just outlive you, it outsmarts time itself. And that's what Cramer's trying to hammer into your skull. Because if your money dies when you do, you didn't build wealth, you just rented it. Cramer takes the gloves off here. He's not talking about fast money, meme stocks, or that dopamine rush you get when a trade goes right. He's talking about the long game, the generational game, the one nobody talks about because it's not sexy, it's not fast, and it doesn't make for a good TikTok. But it's the one that actually matters. Because wealth isn't about what you make, it's about what you leave behind. And that requires discipline, patience, and something our generation absolutely despises, delayed gratification. He makes the point that every generation either builds or destroys the future of the next one. Most people spend their lives trying to look rich instead of becoming rich. They don't invest, they consume. They chase luxury because they think it signals success, but all it really signals is insecurity. They think freedom means not having a boss, when in reality, financial freedom means not needing one. Cramer argues that wealth isn't a status, it's a system. One that compounds quietly in the background while everyone else is screaming about the next big trend. He talks about the power of compounding like it's a superpower, and it kind of is. Because compounding doesn't just grow your money, it multiplies your time, but you only get to experience it if you stop interrupting it. The average investor keeps resetting the clock, buying high, selling low, chasing whatever CNBC screams about that week. Cramer's advice, let time do the heavy lifting. Stop trying to outsmart decades with a day trade, but the real gut punch comes when he connects this to your personal philosophy. Because building generational wealth isn't just about stocks, it's about mindset. It's about teaching your kids, your family, even your future self, that money is a tool, not a toy. You don't pass on wealth by handing out cash. You pass it on by passing down principles, discipline, curiosity, resilience, respect for time, and an allergy to debt. Because the truth is, if you give someone money without teaching them how to earn it, you're not helping them. You're setting them up for failure. And here's where the commentary kicks in. Look around. Most people can't think beyond the next paycheck, let alone the next generation. We live in a culture of instant everything. Instant gratification, instant fame, instant outrage. Everyone wants results now. But the market doesn't care about your urgency. It only rewards consistency. If you can delay the impulse, if you can think in decades instead of days, you win by default. Cramer's lesson here is deeply unsexy but unshakably true. The biggest flex isn't owning a Ferrari, it's owning your time. It's having the freedom to walk away from anything that doesn't serve you. And that kind of freedom doesn't come from gambling. It comes from structure, from years of disciplined investing, reinvesting, protecting, and teaching. He's blunt about it. If your wealth doesn't outlive your ego, you failed. It's also about resilience. Every generation faces its version of chaos, recessions, crashes, inflation, war. The question isn't what happens, it's who's prepared. Building legacy wealth is about creating systems that can withstand collapse. It's about designing your financial life so that your great-grandkids won't have to start from zero just because you couldn't say no to lifestyle inflation. So, here's the uncomfortable truth most people don't want to face. The reason you'll never build legacy wealth isn't because the system's rigged or because you weren't born rich. It's because you keep selling your future for convenience today. Every Amazon order, every car payment, every treat yourself moment compounds, just not in your favor. You're building someone else's legacy, not your own. Cramer's ultimate message is brutally simple. Legacy isn't what you leave for people, it's what you leave in them. You want to build something immortal? Teach the next generation how to think, how to question, how to invest, how to delay gratification. The market changes, but human behavior doesn't. And the ones who master themselves master the game. Because let's face it, the biggest enemy of wealth isn't the market, it's the mirror. You can't out-invest bad habits. You can't out-earn stupidity. You can't buy discipline. Legacy requires a long-term vision most people will never have because they are too busy proving something to people who don't care. Key takeaway: real wealth isn't measured by what you own. It's measured by what lasts after you're gone. The smartest investors don't chase returns. They chase resilience. Legacy isn't a number, it's a philosophy, one built on patience, discipline, and long-term thinking. Favorite quote: wealth that dies with you was never wealth, it was a performance. The final bell: lessons from the battlefield. The market doesn't care who you are. It doesn't care how smart you sound in meetings, how many books you've read, or how much motivation you post on LinkedIn. The market has one job: to humble you. And if you stick around long enough, it always will. That's the truth Cramer drills into you by the end. The part people love to ignore because it doesn't fit the fantasy. The game doesn't end with a trophy, it ends with a lesson. Usually one that costs you money, pride, and sleep. See, the market is the greatest mirror ever created. It shows you who you really are when your plans collapse, when your conviction fades, and when your emotions start screaming louder than your logic. Every investor starts out thinking they're rational until they aren't. You tell yourself you'll buy the dip until the dip turns into a crater. You swear you'll let your winners run until the first sign of red makes you hit sell. What Cramer reminds you is that the battlefield isn't on Wall Street, it's in your head. Throughout his career, he's seen it all. Bull markets that made geniuses out of gamblers, bear markets that turned legends into ghosts, and every kind of panic in between. He admits that even he, the guy who's been through every high and low, isn't immune to fear or greed. The difference is that he's learned to see those emotions for what they are: signals, warnings. Because once you stop pretending you're invincible, you start playing the game like a pro. This is where the real lesson hits. Humility is your ultimate edge. The amateurs think success comes from prediction, from finding the next Tesla or timing the next crash, but the pros know it comes from preparation. You can't control the market, but you can control your process. You can't stop volatility, but you can stop yourself from reacting to it. That's where wealth is built, not in the wins, but in how you handle the losses. Cramer's final message is almost philosophical. No matter how long you play, you'll never beat the market. You can only beat the version of yourself that keeps making the same mistakes. The trader who chases hype, the investor who thinks this time is different, the human who can't admit when they're wrong. Because in the end, every great investor learns the same truth. You're not here to predict the future, you're here to survive it. And that's where most people fail. They want certainty in a world that doesn't offer it. They want control in a system designed to remind them they have none. But the paradox of the market and life is that freedom comes from acceptance. The moment you stop fighting the chaos and start adapting to it, you stop being a victim of it. Cramers has seen thousands of investors lose fortunes trying to control what they couldn't. The ones who lasted didn't fight the storm. They learned to navigate it. This lesson applies far beyond stocks. Life itself is a market, unpredictable, emotional, full of noise. You can't time it perfectly, you can't always win, but if you focus on managing risk, on building systems that protect you from your own worst impulses, you start to realize something profound. Consistency beats brilliance, every time. Cramer's tone in the end isn't triumphant, it's reflective. He's not selling the dream of easy riches, he's reminding you that every loss has value if you're willing to learn from it. Every mistake you survive makes you sharper. Every bad trade teaches you humility. The goal isn't to avoid failure, it's to become anti-fragile because of it. So when the final bell rings, in the market or in your life, the question isn't how much did you make? It's how much did you learn? Did you evolve, or did you just repeat the same cycle with different excuses? Because the people who win long term aren't the ones who outsmart the market. They're the ones who outgrow their own self-sabotage. And maybe that's the most powerful takeaway of all. This isn't a story about stocks. It's a story about discipline, resilience, and the willingness to confront the part of yourself that keeps pulling you backward. The market is just the stage. The real war is internal, and victory doesn't come from knowing the future, but from knowing yourself. Key takeaway: the market rewards clarity, not arrogance. Success doesn't come from conquering the chaos. It comes from learning to move within it. You can't win every trade, but you can win every lesson. Favorite quote: in the market, every mistake has tuition. The question is, will you pay it once or keep repeating the class? Cramer's Code, the principles of power investing. You ever meet someone who says, I'm not really into the stock market? Yeah, that's usually code for, I lost money once and never recovered emotionally. The truth is, everyone is in the market, whether you like it or not. Your retirement fund, your job, your rent, your groceries, your future, they all dance to the rhythm of Wall Street. You might think you're on the sidelines, but the game is being played around you every single day. And that's exactly why Cramer's final code hits so hard, because it's not about trading. It's about thinking like a player in a world that's rigged against spectators. Cramer's Code is the unfiltered, scarred, caffeine-fueled manual of a man who's seen more chaos than most people could survive. It's not about perfection, it's about principles, about the rules that keep you alive when the algorithms go berserk and the headlines scream, panic. It's the kind of wisdom forged in the fire of crashes, recessions, bankruptcies, and human stupidity. The first rule? Respect the market, but never trust it. The market is like a charming liar. It flatters you, it seduces you, and the second you start believing it cares about you, it burns you alive. That's not cynicism, that's experience. Cramer makes it clear. The market has no conscience, no mercy, no memory. It rewards those who adapt and destroys those who hesitate. If you want to survive, you have to trade like you're dating a sociopath. Always watch the signs, never ignore the red flags, and never assume you're the exception. He hammers on discipline, not the kind that looks pretty on a motivational poster, but the kind that hurts. The kind that makes you sell your favorite stock because the numbers say it's time, even though your ego's begging you to hold. It's the kind of discipline that forces you to plan your trades before you place them, not justify them after you lose. That's the real battlefield, not CNBC, not Reddit, but the war between your gut and your brain. Cramer's code is also about accountability. Stop blaming the system. Stop blaming the Fed. Stop blaming your neighbor's crypto picks. You're not losing because the game is unfair. You're losing because you're unprepared. Everyone loves to say, the rich get richer, but the truth is, the disciplined get richer. The people who learn, adapt, and stop pretending that investing is about luck. You wouldn't expect to beat Serena Williams after watching a few YouTube clips of tennis, so why do you think you can outsmart professionals with Bloomberg terminals and insider data after one podcast? He also talks about humility, and it's not optional. Every investor eventually meets the trade that humbles them, the one that wipes the smile off their face and replaces it with respect. You either learn from that or you quit. The pros aren't smarter than you, they're just less stubborn. They know when to walk away, when to admit defeat, when to reset. The amateurs double down on their mistakes because pride is expensive, and the market collects every cent. But here's the twist. Beneath all the hard talk, there's something deeply human in Cramer's philosophy. The code isn't just about stocks, it's about living intentionally, about having rules for your money, your emotions, your time, because if you don't, someone else will write them for you. Your boss, the government, the economy, the damn algorithms. Discipline is freedom, and that's the paradox most people never get. The more control you build into your system, the freer you become from chaos. The last piece of the code is pure Cramer. Never stop learning. Markets evolve, technology shifts, sentiment flips overnight. The people who treat investing like a one-time skill get buried. The ones who treat it like a lifelong craft, they thrive. The market rewards curiosity and punishes arrogance, because the second you think you figured it out, it changes the rules. That's why even after decades, Cramer still studies, still adapts, still questions himself. The game doesn't end, it just gets faster. And maybe that's the most important lesson of all. There is no finish line. The moment you think you've mastered the market, you're done. The code isn't a guarantee of victory, it's armor. It doesn't make you untouchable, it makes you durable. In the end, the smartest investors aren't the ones who make the most money. They're the ones still standing when everyone else has burned out. So, yeah, you can ignore the market if you want. You can sit on the sidelines, complain about inflation, blame the billionaires, and tell yourself you're playing it safe. But safety is an illusion. If you're not playing the game, you're being played. And Cramer's code isn't a get-rich manual. It's a survival guide for anyone who's tired of being prey in a world built by predators. Key takeaway. The market isn't a problem to solve, it's a force to understand. The only real power you have is your preparation, your discipline, your patience, your ability to adapt. Wealth doesn't come from control, it comes from respect, for risk, for rules, and for reality. Favorite quote, the market doesn't owe you clarity, only opportunity. It's your job to be ready when it knocks. Conclusion. You want the truth? Here it is. The market was never the enemy. It was the mirror. It showed you everything you refused to see about yourself. Your greed, your fear, your ego, your impatience. You didn't lose money because the system was broken. You lost because you were. But that's the gift of this game. It breaks you so it can rebuild you stronger, sharper, smarter. Cramer didn't write this book to make you rich overnight. He wrote it to wake you up, to rip the blindfold off and say, stop blaming the chaos. Learn to master it. Every chapter was a strike against the lies we tell ourselves, the myth of certainty, the comfort of ignorance, the addiction to quick wins. From the first crash to the last rule, every page was a mirror, showing that the battlefield isn't on Wall Street, it's in your head. The real investors, the ones who last, they don't chase trends, they chase truth. They don't fear downturns, they prepare for them. They don't pray for the bull market to last forever because they know it won't. They move through volatility like it's home. They don't need the market to be kind. They just need to understand it. That's what this book gives you. The code. The unspoken rules of power investing. The mindset that turns chaos into clarity. The discipline that turns emotion into precision. Because money isn't freedom. mastery is. If you can control your reactions, if you can stay calm while everyone else loses their minds, then you don't just win in the market, you win in life. Every crash teaches you something about who you are. Every recovery reminds you what you're capable of. Every mistake humbles you, and every success shows you why it was worth the pain. The market will test you, mock you, and tempt you. But if you hold your ground, if you stay rational in an irrational world, then congratulations, you've escaped the ordinary. Now, here's the part people don't want to hear. This isn't over. The market doesn't stop. The game doesn't end. There's no final level. There's only evolution. You either keep learning or you fall behind. You either stay adaptable or you become a fossil. And if there's one thing Jim Cramer has proven through every boom and bust, it's that survival is the ultimate form of success. So don't stop here. Go buy the book, read it again, mark it up, argue with it. Let it challenge how you think about money, risk, and power. Because understanding this game isn't about memorizing rules. It's about rewiring your brain for reality. And if this breakdown hit you hard, good. It was supposed to. Because the market doesn't reward comfort, it rewards awareness. And maybe, just maybe, now you'll stop playing small, stop chasing noise, stop being average, because in this world, the ordinary get crushed. But the awake, the disciplined, the patient, the fearless, they build empires. If this video punched you in the gut in all the right ways, good, that means you needed it. Hit that like button if you felt it. Subscribe if you're done living blind in a market that doesn't care. Drop a comment if you've learned the hard way that money doesn't change you. It reveals you. And most importantly, go buy Jim Cramer's How to Make Money in Any Market. Read it, study it, argue with it. Because the ones who win aren't the ones who watch. They're the ones who act. Stay sharp, stay dangerous, and never forget, the market doesn't owe you anything, but it will teach you everything if you're paying attention.